If we had started this 30 years ago, a 29-year-old today would have over $250,000 in their Invest America account.
Wow.
It's hard to hate capitalism. It's hard to hate America, right? It's hard to be financially unconcerned when you open up your Invest America account on your mobile device and you see that you too are a participant and winner in this system.
CEO and co-founder.
Joe Lonsdale, the founding partner of Beat.
Palantir co-founder Joe Lonsdale.
Many of you know my friend, Brad Gerstner. He's an amazing investor and leader in Silicon Valley. We're going to hear today a little bit more about his background, how he sees the world, what are the major trends in the past, and what are the trends going forward today, what's going on with today's macro situation in America. We're going to hear about a really awesome program he's creating called Invest America that can realign our country with free market capitalism, with growth, with bringing everyone forward together. Excited for us to chat with Brad today. I'm Joe Lonsdale. Welcome to American Optimist. Brad, thanks for being here today.
Good to be in Austin, Joe.
Brad, you tell the audience a bit about your background. You're an amazing investor, a pilot. You're working on some really cool projects right now. Where'd you come from?
I grew up in Indiana. My dad was first generation college. He was an only child. So kind of his father sacrificed everything and mother to put everything into him. He became an engineer and decided in 1977 to kind of strike out on his own and start an auto parts manufacturing company in a small town, Northwest Indiana. Now, the only problem with that strategy is he had a young family of 4 kids. Interest rates were double digit. Yeah. Inflation was double digit.
It's a tough
we had
time.
an oil embargo in the Middle East. The Japanese were ravishing our auto industry, and we had hostages in Iran. I'm sure we'll get to it. Some rhymes and rhythms with what's going on in the world today. There was no such thing as venture capital in Indiana. Instead, when you started a business, you mortgage your house, kind of mortgage the car, and you put everything on the line. And so I was in middle school, and I watched this kind of heroic struggle for about 5 or 6 years. Ultimately doesn't work out for my dad.
That's rough.
He refuses to declare bankruptcy. He works the rest of his life to pay the bank back all the money that he borrowed. But I think that set me off on this journey. My grandfather, his father, said, rather than becoming entrepreneurs, I want you all to become professionals. So you have to doctor. There are 4 grandchildren. You either need to be doctors or lawyers. I went to law school.
You day traded to pay your way through law school then.
I did. My grandfather that I referenced, so he sacrificed everything his entire life. Drove old cars, lived very humbly. So, of course, the grandchildren were surprised when he passed away that he left $25,000 to each of us, which was an extraordinary amount of money. I had never had any money. I had never had an investment account. In many ways, we, in a rural town, having parents that were struggling financially, I was on the outside looking in. But when I got this $25,000 from him, I was really determined to turn that into more. And so I'd end up going to, day trading it to put myself through law school and business school, got my Series 7 and 63 in law school. And I think part of it was just my journey to reconcile, like, what was it about this business economy that took my dad down? We all have dragons that we have to slay that are byproducts of our childhood. That was
your dragon.
That was my dragon.
And just on the day trading for a second, because I think probably the average person shouldn't be day trading, is my guess. Like, how did you figure out how to do that? Like, what was the theory at the time?
Well, I had a fascination in high school. I was already, going in before school, pulling open the newspaper, plotting stocks. So, mathematically inclined and had an orientation in this regard. And frankly, it was just my hack. It was my way of trying to figure out a way to make money. I can't say that intellectually I had done a lot of studying, that this was a refined way to make money, but it seemed to me that I could study a company, I could study stock patterns, and I could figure out mispricings. And I have to say, the first time I bought a stock, right, it was not the best reason for buying it, but I bought IBM, and they had just put a new CEO in charge, and the CEO's name was Lou Gerstner, and I, no relation. But I was immediately like attracted to the fact that, okay, there's somebody whose name I recognize. And he was, would eventually write the book, Elephants Can Dance. And he really remade IBM. And at that point in time, they were kind of having their second wave. And so made some money on that first stock. And then I remember sitting in business school in 1999. I would sit in the back of the classroom because we had Bloomberg terminals outside of our classrooms. And so I could sneak out, pretend I was going to the restroom, and I could get on the Bloomberg and do a little trading. And at the time, it was the heyday of Internet 1.0. And so remember companies like CMGI that went to $2,000 a share, and they were moving in 10 and 20% increments. So again, I wasn't moving a lot of money around and was able to do that and ended up graduating. Went to Wabash College, spent time at Oxford, law school, and business school, and graduated debt-free.
Went to Harvard Business School,
Yes.
graduated debt-free, got involved in the tech world. And you started your own fund in 2008 with $3 million from friends and family. Is that right?
Correct. So the journey really began in 1999. I was hell-bent to get to Silicon Valley, like a lot of other students at that point in time. I had come out and met with some startup companies at the time. One that sticks in my mind is Tell Me. Another one was a little search engine called Google. My classmate, who became my wife, decided we were going to stay in Boston. I'd met David Fialco and Joel Cutler. They were thinking about starting their own venture capital firm. And I partnered up with them to help them launch their first business, which was a company called NLG, an early online travel company that we would sell to Barry Diller in 2001. I became the co-CEO of that business. And so it was really helping them start GC, starting that first company. We had two more companies I started. OpenList, we sold to a public company in Seattle. Room 77, sold to Google. Got back to the investing side of the business, knew I wanted to start my own business. And the idea really was to build a crossover fund that was venture first, based in Silicon Valley by a founder, that invested in kind of early venture all the way through the public markets. And so that's what drove me down that path.
You've been really great at identifying some big trends. Tell us a little bit more about your investing philosophy. Like you're managing billions of dollars now, obviously. Had a really good 15 years. Like what are some of the trends you've looked at? How do you think about investing?
I know you and I have talked about this. One of the things that I thought was interesting stylistically in my first exposure to venture back in 99, 2000 is they were generalists. People would walk in off the street, two people and an idea. And it seemed like the office was always full of people doing kind of random things, frankly, from restaurants all the way through,
It's even today on Twitter, Paul Graham's like, you shouldn't actually say you're focused on anything because you should back the best entrepreneurs.
That's
This
right.
was like a tweet yesterday. Yeah.
That's right. Yeah. I kind of, and maybe this was my legal training, maybe it's just my DNA, but I kind of consider myself more of a researcher and anthropologist.
You want to go deep on things.
Right, exactly. And so what I had, when I was studying the internet in 1998, 99 and saying, where will durable value accrue? It seemed to me there were a couple areas. And one was organizing all the world's knowledge and information. Another one was organizing all the world's products. So helping us find and buy things, helping us discover knowledge. And you could build effectively a tax collection machine that sat in front of those. So for a decade, I started and invested in search businesses, horizontal like Google, and vertical search engines like leading the Series B in Zillow, or Faircast, or Sidestep, or Kayak, or Booking.com.
Makes sense.
Etc. By 2008, 2009, we had this thing called the iPhone, and we said, wow, something's really changing here. That's no longer going to be search first. That'll be, something else. And we saw these icons evolving on page one. And so how do you become an application? How do you truly leverage? So companies like Uber and Airbnb, companies that were taking advantage of the social graph like Facebook, that became applications and were no longer paying the toll keeper, the search engine, in order to gain access. And then I think we were early to the cloud. People forget, but in 2011, 2012, the cloud was not viewed favorably. And the reason for that is it was more costly, it was less performant, and it was viewed as less secure than running compute in your own data center. Yeah. We had a different opinion there. And so our fund, we run, as you know, a long short hedge fund and a long only hedge fund. And those are permanent capital. And now we're on our 7th venture fund. But back then, when I launched our first venture fund, it was almost all dedicated to the cloud. So early investments in Snowflake and Mongo, Twilio and HubSpot really powered the returns.
We were in the
that
same
first
wave.
venture.
It took a long time to get the big institutions to actually trust the cloud, but it was clear they were going to, and that's where it is now. So, Brad, a lot of people argue today is harder than it was 10 or 15 years ago. I'm curious what you think. They say that, AI, it's a lot harder, especially for venture, to take advantage of that, given that the existing companies could do it as well. And so there's a lot of debates about what the returns the next 10 years are going to be versus the last 10 years. Like, what are the big trends today, and how are you seeing it?
It's not surprising that those arguments are reemerging right after 2022.
Yes.
Okay. Those same arguments existed in 2001 after that correction, and existed in 2009 after that correction. And ironically, as investors and thinkers, we tend to be overly influenced by the most recent events. So I actually think this is the best of time, the intersection when prices have corrected, but you're early in a super cycle.
Yep.
I think AI, or I like to talk about augmented intelligence, will be more important to humanity than the first 3 super cycles I've lived through, which are internet, mobile, and cloud. I think it'll be bigger. And so I don't buy that thesis. Of course, as Bill Gurley, our friend here in town, likes to say, venture capital is cyclical, right? We have not suspended the laws of gravity. Interest rates matter,
Yep.
right? And so that overlay matters, but none of that changes the never-ending waves of innovation that we drive in this country. And when you can get early in one of these super cycles, those tailwinds provide extraordinary opportunities for return.
So we're seeing a lot of $100 million, $200 million AI rounds, some really hot competitive stuff going on in the Valley. Is that what's going to be that makes the money, or how do you play AI?
Well, oftentimes, as you and I, again, have seen, is being early can be tantamount to being wrong. Okay, so think about 1998. Every venture capital firm in Silicon Valley realizes the internet's going to be big, actually realizes that search, organizing the world's information, is going to be important. And the mad scramble was on. Everybody wanted a search logo. Lycos, AltaVista, Ask Jeeves, InfoSeek, go through the list.
Again, those logos maybe wasn't as good of an idea as it seemed at the time.
And here we are. You could have waited until 2004, Google's IPO. You would have captured 90% of the upside ever created by search, and you would have avoided all of those zeros. Remember, I talked about CMGI, started by David Weatherall. That company in 2000, he gave the graduation speech at Harvard Business School. He was on the cover of Time magazine. He bought the naming rights for Foxborough Stadium in Boston, renamed it CMGI Stadium, and was bankrupt a few years later.
I've never even heard of him. I was 18 years old at the time.
Because he beat out Barry Diller in buying Lycos.
That's funny.
Had Barry bought Lycos, it may have ended him as well.
Wow.
So I think being early can be wrong. That doesn't mean that the fundamental thesis was incorrect. In fact, it was right. Internet was going to be bigger than we all thought. Search was going to be bigger than we all thought. But you didn't have to be there and pay those high prices. I think we saw this in early mobile. Danger, Sidekick, BlackBerry, there are a lot, Palm, there are a lot of great mobile efforts before you really had the emergence of the super cycle. Same in the cloud. And so we're early in AI. We're seeing really interesting stuff in the tooling layer. We're investors in the public market, and NVIDIA's Silicon Layer has obviously been ignited because of this. We're going to launch more, we're going to deploy more compute in 2024 than in all previous years combined.
Yeah, the data infrastructure and compute stuff does seem to be a good play, obviously, the last few years. That's an amazing amount of money being spent there.
Right. And so, the condition required to participate in AI is you have to aggregate all of your data and you have to set it free and get it frictionless into the cloud. So we're seeing reacceleration in terms of that entire stack. But if this is as big as we all think it will be, this will play out like the internet did
There's lots
over
of
decades, not months.
Let me run my favorite idea by you I'm working on right now. We're not talking about too much in public, but I think there's a lot of services businesses in our country where, I'll give you one example, healthcare billing, $250 billion a year is spent on people throw tens of thousands, hundreds of thousands of bodies, right, at these crazy billing situations. And it seems to us, we have some really talented ex-Palantir guys working on it. We've been looking at, things like this area. It seems like you can actually make it like 2 or 3 or 4 times as productive. That means you have businesses that are worth billions of dollars, where if you fix them, the margins go from 15% to 50, 60, 70%. Some of this stuff looks pretty interesting to us that could actually happen in the next few years. Are you guys thinking about services businesses with AI or all that stuff?
Absolutely. I mean, and by the way, I remember talking to you early in your journey at Palantir, and you guys were way ahead of your time. And Palantir is in many ways just coming into its own, right, in terms of the significant transformations that it can have on businesses leveraging AI. And so I think that, I was in Omaha recently having dinner, and you look at the Berkshire portfolio, its entire portfolio is already being transformed with AI. Yeah. This is not something that's going to be, discreetly preserved in the tech community. Right? This is going to remake how United Airlines interacts with customers. It's going to remake how, furniture manufacturers finish their goods in the U.S. So I think this is probably the single most important step function we've seen in productivity in this country since the internet. So, and I can give you a couple examples on that.
When do you think we actually see the productivity statistics? It's always been somewhat surprising to me that we do all this stuff in the tech world. Productivity hasn't gone up. Are we finally going to see productivity shooting up in the late 2020s?
It's hard for me to think about the performance improvements that we're hearing about without seeing that flow through to productivity gains. Yeah. So a couple statistics. Copilot, which has 30,000 beta customers at Microsoft, I think is the fastest growing product in the history of Microsoft. Most companies are reporting, I think Amazon Code Whisperer, so this is a code generation copilot, is reporting that they've seen 56% increase in engineering productivity as a result of using Code Whisperer.
That's awesome.
Okay. You look at companies like Meta that have compounded engineering headcount at well over 20% a year for the trailing 5 years, now saying we can hold engineering headcount flat to 1% to 2% as we look forward over the next few years. So I think it first manifests itself, Joe, that you just do more with the same people.
Yep.
The next phase is call centers and things like this, where you can actually get higher net promoter scores with far fewer people.
Yep.
And so I think we're early in this playing out. 2023 was the year of testing. They tested it in the call center. They tested it in the sales with the sales teams. They tested it with their engineers. 2024 is going to be the year of deployments. We're going to start seeing those gains. You will not see mass layoffs. And then 2025 and beyond, I think you're really going to see those transformations kick in. I'll give you one other example. I heard this recently. ByteDance, where we're investors, has about 40,000 content moderators. Okay, these are folks who are flagging, content.
Making sure it's not too pro-US or anti-China. Just kidding.
Well played. You and JCal, my rivals on this. But flagging content. They suspect that they'll see a 90% reduction in content moderators over the course of the next year because that work can be more efficiently and better done by AI. I think this will play out. So think of that. One product, one company, 35,000 heads replaced. I think this is going to be the most disruptive moment in labor markets in the history of modern capitalism over the course of the next 5 years. And so part of the things that you and I are both working on is how do we deal with this as a capitalist system?
Well, let's switch to that because it's not clear our government, unfortunately, is in a strong spot right now to respond cogently to these challenges. So it was very interesting. You talked about how you were touched by having this money available for you when you were young. It was a surprise. And you're working on something like this for everyone in America called Invest America.
Exactly.
Tell us about this.
Exactly. So, some really shocking statistics have come out over the course of the last 5 years about how Americans think about capitalism and free markets. According to Pew, over the last few years, we've seen a 10% decline in people's faith and confidence in capitalism. Joe, among the age group 18 to 29, 44% of that group believe socialism is a superior form of organizing government than capitalism.
It's a disaster.
Okay, capitalism support is in the 30 percentile range. And you think about Ray Dalio's book about the changing world order, right? And what causes that? Effectively, you have countries that become complacent, that become decadent, wealth inequality grows. Inevitably, that leads to infighting and eventually the rise of other powers. So I look at this problem in the United States. I said, this doesn't, although Dalio, has this incredible view studying 2,000 years of history about the rise and fall of nations. One of the things he says, these are dynamic systems. They don't just happen to us. We can influence the outcome. So the idea of Invest America is very simple. Harnessing the power of compounding and capitalism to give everybody skin in the game. It's legislation that would cause the Treasury Department to create 3.7 million private investment accounts a year. So we have 3.7 million children born a year. Treasury would create 3.7 million private accounts where each of those families has private ownership of those accounts. They would seed it with $1,000 from the federal government, set up a 401k match. So companies or parents could match up to $2,000 tax-free each year, and then just let that compound. If we had started this 30 years ago, a 29-year-old today would have over $250,000 in their Invest America account.
Wow.
It's hard to hate capitalism. It's hard to hate America, right? It's hard to be financially unconcerned when you open up your Invest America account on your mobile device and you see that you too are a participant and winner in this system.
It's really interesting because in some ways it's like, oh, this is the top-down status solution. But on the other hand, you're doing that. You're doing this in order to create markets and create more liberty and create people who are aligned and want America to be functional. And what's this cost per year? It's 3,000 times 3.7 million. That's just about $10 billion.
Well, it's $1,000. It's $1,000.
Only 1,000.
Only 1,000
Okay.
seeded by the federal government. Up
Got
to
it.
2,000 that can be matched. So, for example, I've talked to Uber, talked to United Airlines and others. Right, the 401k match in this country, the corporate contribution annually is $75 billion.
Wow.
Okay. If this was 1/10 of that,
Yeah.
1/10 of the 401k match, then the child would have $2,000 or $5,000 in the first 2 years of life. 5,000 compounded by the age of 60, you have $1 million in your Invest America account. Okay. So that's if you don't have contributions beyond the first 2 years, which of course you would. So it's a significant amount of money. Here's the problem. 70% of families in America don't have and will not have an investment account. They will not have skin in the upside of America.
That's bad for all of us who want America to win.
Exactly. And this is going to be solved in one of two ways. You're either going to get bigger government programs, more entitlement, more fighting for UBI, more redistribution, or we can harness the power of free enterprise and capitalism to reconnect everybody with the civic power, right? With the specialness of free enterprise and capitalism. We can allow them to see firsthand the power of compounding. Imagine this. I was in Trenton a few weeks ago. Trenton, like a lot of schools in the middle school, is starting to try to teach financial literacy. If a kid has parents that don't own anything, and the kid has never owned anything, it's very hard to teach them a language which is completely foreign to them.
Yeah.
But now imagine that sixth grade classroom, the teacher says, pull out your phones, which they all have, open up your Invest America account. It has $17,000 in it. And you see the top 5 holdings in the S&P 500, Apple, Tesla, United Health, your share, your ownership in America. Let's talk about how you got $17,000.
It's ironic. The Marxists will not like this. It's good. They won't want these kids having this kind of alignment, but we do want them to have this alignment. I mean, there's good guys and bad guys here, and we want them to be aligned with.
This
with the
is
right
not
views.
a question in my mind about having a foot in either camp.
Yeah.
You're either on the side of free market capitalist democracy or you're not, and this unequivocally and unabashedly is.
And it's interesting. We have, I think, a $2 trillion deficit this year. And you're asking for a $3.7 billion program, which is tiny compared to that.
What we've spent in Ukraine to date would pay for this program for 20 years and 75 million children, touching almost every American household. Fast forward 20 years. Can you imagine every household in America touched by an Invest America account? Okay, for the same price on just the incremental effort that we've given to Ukraine. Or In the last stimulus package, I think there was $75 billion for incremental IRS enforcement. $75 billion.
I know it's a little bit crazy. How is Congress receiving this right now? What's the response?
So I will say that, I've spent 30 years like you, engaged in the public sector, trying to have impact in a variety of ways. Just as an entrepreneur looking for product market fit, I've never worked with something that has quicker product market fit than this. From groups on the left to groups on the right, we have bipartisan support emerging in the House and the Senate. With any luck, we'll have this introduced in the spring of next year.
You should need a speaker in the House, hopefully, to help you out.
That was a little bit of a setback for us, but we're working through that. We have set up the 501c3 and C4. I've got great help from the likes of Matt Lira, who you may know from who's driven a lot of innovative reforms, including opportunity zones, who's respected by both sides of the aisle. And so, I'm putting millions of dollars up against this. We're inviting others to stand with us shoulder to shoulder. This is a fight for American free market capitalism by empowering every family. And by the way, yes, this will disproportionately benefit those currently left out of the system. Yeah. But one thing I was talking with at an event with former President Clinton, and somebody said, "Yeah, but shouldn't only certain groups of people get this and not other groups of people get this? And we should only allow them to invest in certain companies and not all companies." And Clinton called him and said, "It has to be universal. We have to bring people together, not divide them. And if the S&P 500 is good enough for everybody else in America, it's good enough for this program." And he's exactly right.
Yeah, no, you don't want to let a bunch of woke nonsense get into this and fight over which companies qualify or not. All this kind of bullshit. That's the Marxist stuff we're pushing against.
Right. And by the way, what's the greatest weapon against that? It's making everybody benefit from the upside of capitalism and free markets, right? If we don't do this, Joe, if 70% of the people are left out, if tens of thousands of people are displaced because AI is going to displace their jobs, right? We're going to have a bigger problem, as Dalio correctly points out, in the future than a smaller problem. So you and I, and folks like you and I, can do things proactively to get in front of this. And so I'm going to fight like hell for this because I think it's important for the future of the country.
I actually do think AI at some point makes the markets melt up if it actually does what you and I think with productivity, which means we need everyone aligned with them. What do you do about, there's obviously all sorts of issues. This one's maybe too controversial, but my guess is that a lot of people won't want the incentive for people from South America to rush here and have babies across the border in order for the babies to get free accounts. I guess you need to do border security better with this.
Listen. I hope we don't need another excuse to have secure borders.
Yeah.
Right? If the present conditions in the world, right, aren't screaming at us loud enough. Hell, I think even the current administration has recently said, we need to invest more in border security. That to me, we don't need this program to remind us that we need to have secure borders. And as I've said, let's have secure borders, and then let's actually have a strategic policy in this country to recruit the world's best and brightest.
100%.
Right?
100%,
we ought to be more
page.
aggressive, more strategic to invite the world's smartest to build their companies here and to build their families here. We just have to have a system that respects fairness and rules when it comes to entering the country.
We're on the exact same page. Well, I think this is a really compelling idea, Brad. And obviously, you're eager to be helpful on this one. Hopefully, we can get some of our listeners just to step up on it as well. Where can they find out more, by the way, about it?
So, Twitter handle, InvestAmerica24. And we'll be launching more. I follow my Twitter handle at AltCap. We've pushed out a few 15, 20-second spots that give you a sense of kind of where we're going to go in the campaigns. But we're going to be pretty aggressive. We have lots of people who've indicated a willingness and a desire to get behind this financially. We've got greats, right? The greats of finance and investing who want to spend their time and energy helping us build the financial literacy that's going to go into middle schools and high schools, right? That's built around Invest America. This is this is something that really can unite us as a country, unite Democrats and Republicans around a cause that we all believe in, which is American democracy supported by free market capitalism.
I love it. Let's zoom out a little bit. I want to talk a little more about macro outlook while I have you here, because everyone's asking. Our 10-year note just crossed above 5% yield. We have a crisis in the Ukraine and Russia situation. We have this stuff in Israel. China is terrifying everyone. Japan's trying to ramp up to deter them. Like, what's going on in the world? Is this like the 1970s? Like, what, are we going to have lots more inflation in the next few years? Like, what should we be thinking about here?
So as a public market investor, I think about the future as unknown and unknowable. And I look at distribution of probabilities, and something is either becoming more likely or less likely, and you adjust your exposures based upon prices and whether or not those events are more likely or less likely. So as we sit here today, listen, the 10 years at 5%, the Fed has said its forecast for next year is 1.5% on GDP. I think that's probably rosy given the things that we're seeing in the world. 20% credit cards, 10% car loans, 8% mortgages are having a deleterious impact on consumption.
No one's selling or buying houses right now. It's
exactly.
crazy.
And so I think there's a lag effect. Powell even said yesterday, continued to remind us of that lag effect. Whatever it is, we're close to the end of what has been the most parabolic rate hike cycle in the last 50 years in this country that's been hugely destabilizing to financial markets.
It's the biggest bond route in 150 years, I think. It's crazy.
Let me be clear on this. I believe the Fed made a huge mistake in the summer of 2021. I think it was knowable then. I think any of us paying attention were tweeting about it. The cost of a container from China to the U.S. had gone up 20x. Okay? The idea that we didn't have an inflation problem in the summer of 2021 that would warrant just moving off of zero.
Yep.
We had Neil Kashkari, Fed president, in Minnesota, who said at the time, there is no chance we raise rates until at least the end of 2023. He was only off by the most parabolic rate hike in the history of the country, right? Yeah. So that to me was 9 months that we wasted. We got behind the curve on inflation. And once we got behind the curve, there's positive reflexivity to inflation. So what I mean by that is if your competitor raises their salary, they're going to pay somebody, right? Then you have to raise yours. And then they raise theirs, right? That is this wage price spiral that we talk about. We got behind on that. Now I think we're nearing the front end of that. So we're at 5%. Could we go to 5.25? Could we go to 5.5 on the 10 years? Sure. But think about the convexivity from 0 to 5. So that's behind us, right? If you look at the futures curve, it'll tell you there's an 84% chance of a rate cut by June. And the Fed itself thinks we'll have 2 or 3 rate cuts next year, probably in the back half. So as investors, you and I shouldn't spend too much time focused on could it go to 5.5 or whatever. It's not a big move. I look at this and say we're on the front end of a rate cutting cycle. Okay, so think about the year 2000, May of 2000, the markets were rolling over, but the Fed, again, raised rates 50 basis points. Its last hike. By January, 6 months later, they were cutting rates. And they would go on to cut rates by almost 500 basis points.
So you're not worried about some kind of fiscal insanity where they spend so much more money and somehow cause more inflation in the next couple of years? You think it's pretty naturally just going to go over into a rate cut? Well,
listen, there has been fiscal insanity.
There has been.
We have to reel it in. The stimulus package that we did right at the start of COVID, right, when we didn't know whether this was Ebola or whether this was a common cold, that one is justifiable. Yeah. The second stimulus package and then the push for the third made no sense to me, right? Threw a lot of gasoline on the inflation fire. I don't see any appetite in Congress. I don't see any appetite among the Republican contenders for the presidency for any more fiscal stimulus. So I actually think, chalk me up to being a little bit more optimistic. I think we're going to see more austerity on the fiscal side out of Washington. Obviously, the monetary side of the house is already highly restrictive. We're doing quantitative tightening. We've got over 2% real rates in this country, the highest since, in over 20 years. And so I think we're set up for inflation to come down as the Fed expects, We're nearing the top of 10-year, if not at the top. We're going to see rate cuts next year. And importantly, we're at the beginning of what may be the most important super cycle accelerant to our economy in a long time. We're going to see cost savings in call centers and engineering, et cetera. So bottom line margin expansion.
So you think tech's disinflationary as well, and it's going to hit again, you're saying. That's interesting.
And so listen, there are a lot of things we have to do to tackle this. We have to get a modern and strategic immigration policy in this country, coupled with secure borders, et cetera. All of these things will contribute to healthy growth in this country. But listen, yes, it is true. If we don't get our fiscal house in order, right? If we think we can get away with $5 trillion deficits and $100 trillion of national debt, we're fooling ourselves, right? We'll lose reserve currency status in this country. But I don't think that's fait accompli. And as they've often said, the U.S. does everything wrong before it ultimately does what's right.
I hope you're right. I'm seeing what was called an Inflation Reduction Act. I see a lot of even my companies getting giant $100 million loans that are cheap. I see student debt forgiveness. I see money still being thrown around pretty aggressively.
Can we both agree? Washington, I mean, they do some doozies, right? But only Washington could spend trillions of dollars injected into the economy and call it an inflation reduction.
It is pretty ridiculous. It's pretty ridiculous. It scares me. We need to get the deficit from $2 trillion down to not much of a deficit if we're going to fix it. But I hope you're right and things turn over, and then it's not a replay of the late 70s. That'd be much better. One last question on the tech stuff. I really liked your letter to Mark Zuckerberg in 2022 saying that they had to get fit. Basically, there's warning of bloat. I think this is similar to what a lot of us are saying to a lot of our companies who are feeling very expansive in 2021. And I mean, have you seen things get fit overall in general in Silicon Valley? Is there still a lot of bloat? Like, where are we right now on that?
Well, I think that was a seminal moment. And it was made seminal because of Mark Zuckerberg. You know, when somebody writes an open letter like that, time to get fit, what I said at the time was that it was an open letter to all of Silicon Valley, to all of technology, who in the middle of COVID, in the middle of the age of excess, had all done too much.
Yep.
Hired too many people, spent too much money, too many espressos and free lattes, you know, in the cafeterias in Silicon Valley, and that we needed to wake up, right? We needed to get back in fighting shape because we're going to have rates increasing, things were going to get tougher. Mm-hmm. And rather than Zuckerberg saying buzz off, he writes what's one of the better CEO letters of the last 10 years, Year of Efficiency, where he said flatter is faster, right? And he really embraced this idea that when you compress layers in an organization, when you tighten your belt, when you get fit, you don't get less, you get more. People are happier, you release products faster. Yeah. And so I think that became the rallying cry for at least all the companies that were awake in Silicon Valley.
Yeah.
Are there still companies that are asleep at the wheel and think the gravy train's going to continue? Of course, but certainly every company in our portfolios, fitness and efficiency has become the lexicon of this moment. And I give all the credit to Mark for really taking the lead. Obviously, Elon, with the work that he's done at Twitter, right? They reduced headcount by 70, 80%, and the product release cycle is probably gone up by at least 70%, right? It's incredible what they have in the pipeline there. And the fact that they're doing this with, you know, a fraction of the people before, right? That's the case study. Yeah. Facebook's the case study. And, you know, competitors would be well served to follow.
Now, we're seeing a lot of our companies' productivity is going up when you actually cut the bottom 20%, bottom 30%. I wish the government can learn from them. So we'll see if we can take that attitude to DC. You know, Brad, we've started the American Optimists to push back on a lot of the cynicism we're seeing. It's been, you know, for me personally, a really tough couple of weeks with things I'm seeing in the world. But, you know, what makes you optimistic? What are you seeing that gives you confidence in our future?
Ultimately, you know, if you read the Bill Gates annual letter and you look at any trend line in the history of humanity, okay, so there have been 117 billion people estimated to have inhabited the planet. 110 billion of them never saw a single invention in their entire life. You look at human progress, lifespans, children who die in childbirth, disease, etc., education, literacy. It was basically flatlined for most of human history, right? And the reason for that is because their lifespan was shorter than the invention cycle. Okay. So the modern experiment, now you look at any of these trend lines over the course of the last 50 years, and it looks like a revenue graph we would love to invest in. It's straight up and to the right. So I think it's really important that we maintain proportionality when we think about where we are in the history of the human experiment. We fought through world wars. We fought through Vietnam. We fought through Korea. We thought, I told you about my dad when he got started, right? 15, 20% interest rates, inflation, embargoes, hostages in Iran. We have been through hard shit. This experiment that we have in this country, I believe, is the best experiment to ever be run. We're in the fourth generation of risk capital in the world that you and I inhabit. Yep. Entrepreneurs around the world still want to come to the United States to invent the things that are going to improve lives for people, make them live longer, make them be healthier, right? Whether it's using AI to identify blood cancers, using AI to help you identify coronary artery disease before it exists, making our lives better in terms of, education for our children. I think we're on the precipice of moving from this moment where we had no augmented intelligence to super intelligence. I think, that's going to be good, but it is incumbent upon those, I think, who are the beneficiaries of the system to do the things you're doing at Cicero, right? To do the things that we're doing with Invest America, to try to recognize that there are adverse consequences of human progress. And so we can tackle those things one by one. We can tackle the administrative state that's no longer serving people, right? We can tackle state by state like you have, whether it's healthcare legislation, education-oriented programs that make all of those things run better and more efficient and really thrive under the power of the innovative process. And so, I tend to be an optimist when it comes to this. You see more engagement, not less engagement by guys like you and me, because I think that there's a recognition, right? That, there may be 2,500 miles that separate Silicon Valley and Washington, D.C., but we're all in this together. If America and the American experiment, if people don't believe in free market capitalism and democracy, then we all lose.
When our most successful leaders like you stand up and fight for our country, and we're doing that together, that gives me a lot of hope for our civilization. Thanks, Brad, for joining us.
It's been great to be here, Joe. Thanks for having me.